Anthony Walker, thank you for joining Business Weekend. Let's start with the state of Victoria. Of course, this week Standard & Poor's put the state on a negative watch. Now, what is the likelihood, based on past experience, that Victoria will actually lose its prized AAA rating?
Thanks for having me first, Adam. Appreciate it. So the likelihood of Victoria losing its AAA rating is much higher than in the past, which is saying something. It was the first time that Victoria may not be rated the same as the sovereign since it originally got its credit rating in 1987. So for the last 33 years, it's been rated the same as the sovereign. What we're saying now is there's a significant chance, a 50-50 chance in the next few months that we may lower the Victorian rating.
So was the decision linked specifically to the latest lockdown in Victoria, or basically was it coming anyway?
It's been elevated. So in May, as you may remember, we had a negative outlook on Victoria. That's a 1 in 3 chance of a lower rating in a 2-year period. What we're saying now is it's a 50-50 chance in the next few months, and that is directly because of the latest lockdown. This was not factored into our base case in May. We thought that by this stage, we'd be getting out of the restrictions, we'd be opening up the economy, fiscal accounts would start to improve. That's all been now unwound as of Sunday's decision. There's a lot of uncertainty in the economy right now, and nobody knows what's going on. There's been a lot of announcements, but very little policy behind it. And that's all weighing on this economic outlook.
Well, just turning to Victoria's balance sheet, presumably you had forecasts for its gross debt and its deficit before this latest lockdown. What is the difference? What's the change now that this has happened?
Yeah, so we've got very similar forecasts at the moment. There's a lot of uncertainty, as I was just mentioning, and we're trying to get through the quantitative numbers there to figure out exactly how big this change is going to be. What we saw is roughly a 50% increase in debt compared to current levels in the next 3 years. That's a huge increase in debt. And that could actually be much higher than that going forward with this latest lockdown, and the permanent scarring could leave in the economy.
Yeah, some people are saying that basically the Commonwealth is kind of standing behind the states, if you like, and so the Victorian government's really not feeling the full fiscal pain of its decision. Is that a fair analysis?
It is a fair analysis. We've heard that the Commonwealth may ask Victoria to contribute. So far, we haven't seen that. We know that childcare, we know that the pandemic leave is being funded by the Commonwealth. Commonwealth is actually funding all the unemployment benefits, for example, JobKeeper, JobSeeker. So the states aren't being impacted as much as the sovereign at the moment. Obviously, GST, stamp duties are, but the direct welfare payments are coming through the sovereign's balance sheet.
Now, turning to some of the other states, which of course largely are just rated AA, which of them, if you had to pick one, will be most likely to face either a negative outlook or a negative watch scenario in the future?
So all of them are kind of unique in their own characteristics. They all have different headrooms. We haven't changed any outlook in any other state because of this. New South Wales, ACT were changed because of the sovereign. The other states so far have not been changed, so they've all got stable outlooks. We haven't seen this kind of flow-on effect yet.
Now, Queensland does cop a lot of criticism, certainly for its large gross debt levels. Does the situation in Victoria mean now that Victoria's will actually surpass Queensland, if you like, as the fiscal laggard of the Federation?
So when we look at Victoria and Queensland, there's no doubt Victoria's debt levels compared to the revenues is jumping quite high. It's going to get towards Queensland's levels. Queensland will probably still be a bit higher in debt to revenue numbers, but there's no doubt Victoria is now kind of surpassing what we see in the ACT and New South Wales other AAA states, and it's really headed towards Queensland's levels, which are AA+.
Certainly, though, we've seen across all of the states that they can borrow very, very cheaply, just like the Commonwealth can. So some might say, does it really matter that they're taking on all this debt, that they might lose their AAA rating? What do you say to that?
Yeah, it is correct. Record low interest rate environment is actually helping. The Reserve Bank is helping. But ultimately, this has to be paid back at some stage, and interest rates at some stage won't stay at record low levels. This debt is not going to be repaid in the next 5 or so years when interest rates are low. These debt levels are going to be there for decades to come.
Yeah. So some people say that the future generations will have to pay the debt back. I mean, in your experience looking at Australia, looking around the world, are these large increases in debt actually paid back, or they just tend to sit there?
Yeah, in most cases, they tend to sit there. I don't think we're going to see a generation of Australians coming back at the sovereign level or state level where we have a surplus position of net assets. We've got GDP nationwide for governments around 35% net debt to GDP. I can't see that coming back towards where it was in 2007.
Yeah, let's try to put some numbers now around the actual macro outlook, if you like. Now, what did S&P have as its expectation, if you like, for this quarter? And kind of what does it have now in light of the hard lockdown in Victoria?
Yeah, so our GDP forecast for Australia is a 4% contraction in 2020 calendar year. We were expecting a small surplus of around 1% positive growth in September. That was before Victoria's previous lockdown and again the extension on Sunday. That's highly unlikely to materialise now. So we're going to see probably 3 negative quarters of GDP in Australia before we see a December rebound rather than a September rebound.
And just looking at house prices now, certainly that's something lots of people like to focus on. Presumably the hard lockdown in Melbourne is going to make it more likely that there's a much larger slump there in house prices?
Yeah, so we come out with a number last week. We did some publishing and some outreach on a 10% nationwide hit to house prices. Now, we're thinking that's going to be over a 12-month period, so we're not overly concerned with that. Obviously, what we've just seen in Victoria is going to change the dynamics here. Victoria, Sydney drive the housing market. We're expecting them to be a bit weaker than the national average. Victoria is going to suffer even greater as population growth is going to decline. It's going to be a drastic hit to population and demand cycle, demand factors in Australia. So we do think that Victoria's housing market will be relatively weaker than the national average.
Certainly 10% sounds a lot, but given rents have fallen, certainly in some cases in Sydney and Melbourne, far, far more than that. I mean, certainly anecdotally, I know, 25, 30% falls now in new rents. Why is it that house prices have not fallen by the same amount or aren't likely to?
Yeah, we think it's going to unwind what we saw the past growth in the last 12 months being. There's always this underlying demand, supply shortages in Australia. We think that the supply shortages will still be there. And long term, with population growth kind of coming back in migration, at the moment we're seeing construction and approvals fall quite sharply. There will be an ongoing shortage of supply in Australia, and maybe in 2 years' time when the economy picks up and population starts coming back from migration, there could be a situation where we have double-digit growth again. So we really think that the next 12 months, there's a lot of uncertainty, but there's still positives out there.
Anthony Walker, thanks for your time.
Thanks for having me. Appreciate it.